This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, August 4th, 2015. Euro dollar. So at this point, the euro is still trying to figure out which move it's going to take next. If it's going to continue within this bearish trend to the downside below recent lows at 108.09 and down towards that multi-year base from March at 104.62, or if we're going to see an additional correction off that 108.09 low going back to the 20th of July up towards and above recent highs that we saw going back to the 27th of July at 111.30. At this point, we need to see a break above 11.30 or back below 108.09 for clearer directional insight. Sterling dollar. So cable remains highly constructive over the past several weeks and few months, with the market now looking like it wants to put in a higher low at 153.50 ahead of the next upside extension back towards and eventually above the recent 2015 peak at 159.30. At this point, only a break back below 153.50 would take the immediate pressure off the top side. Dollar yen. So dollar yen has found some significant internal resistance in the 124.50 area, and the market looks like it's being well capped in that area, potentially in favor of a bearish resumption or a more significant correction to the downside back towards potentially that 121.30 low that we saw back on the 8th of July. At this point, though, we need to see a break back below recent lows in the 123 area to confirm and accelerate declines, while inability to do so will keep the more immediate pressure on the top side. Clearly, dollar yen is in a longer-term uptrend, and so the pressure ultimately remains on the top side, but again, with monthly studies overbought, there is risk for a bit of a pullback before we see a resumption of gains. Euro Swiss. So Euro Swiss looks highly constructive now after breaking above previous resistance at 105.75, and the next key target is on that February peak at 108.15. At this point, only a break and close back below 104 would take the immediate pressure off the top side. Aussie dollar. So Aussie dollar has been broken down in recent trade to fresh multi-year lows, though there is the possibility that the market is now trading into a doubled bottom scenario, a break back above the high that we saw last week, which comes in at 73.66, would confirm and open the door and trigger that double bottom, which was actually triggered the other week on a break above 73.50, though the market couldn't close above 73.50. So a break back above last week's high, which comes in at 73.66, 73.67, would do a good job of confirming and open the door for an acceleration of gains back up towards the 74.50, 75 area. Ultimately, however, the downtrend remains firmly intact, and if we do see any upside, it's classified as corrective in favor of the next lower top, potentially in the 75 area, and a bearish resumption. Dollar CAD. So dollar CAD continues to trade higher with the market at fresh multi-year highs, trading up towards 132 thus far, although the market is now overbought and potentially due for some form of a corrective pullback in the sessions ahead. At this point, a break back below 128.61, which is now key short-term support, would open the door for an acceleration of declines and a further correction into the 126 area. But overall, the uptrend remains firmly intact, and any setbacks are viewed as corrective, with the higher low sought out potentially in the 126 area ahead of the next major upside extension back above the recent multi-year highs. Kiwi dollar. So Kiwi has slowed down its decline after trading to fresh multi-year lows just under 65 several days back. And the market could be in the process of unwinding some oversold technical studies before it looks to resume its current downtrend. At this point, however, we shouldn't rule out the possibility of a potential upside correction, a further upside correction, back above recent highs that we saw around 67.40 and towards the 70 area further up. However, ultimately, the downtrend remains firmly intact, and any rallies are viewed as corrective in favor of that next lower top and bearish resumption. SPX 500. So the S&P 500 has been chopping around over the past several sessions, though it looks as though the market could be in the process of carving, or slowly carving, a more meaningful longer-term top, with a break below the March low at 2040 to confirm and accelerate declines. At this point, only a break back above the record high from May at 121.37 would negate and open the door for fresh upside and fresh record highs. and gold. So gold has been in the process of consolidating that latest sharp drop that we saw to fresh multi-year lows below 1100, with the market now at risk for fresh, deeper setbacks down towards key psychological barriers and the next major support zone at 1000. Technical studies are, however, oversold, so there is risk for a short-term bounce, but we would need to see a break back above previous support at 1142 in the form of that previous 2015 low to take the immediate pressure off the downside.